We're just seconds away from housing data. The futures right now, as you can see, the Dow has worsened a little, triple digits now. NASDAQ also was almost got to unchanged, and now the S&P is down. Take a look quickly at the treasuries, and then we'll get to the housing data, because we just got January housing construction data. Housing starts coming in at 1.37 million versus right in line with the estimate. Building permits for the month coming in at 1.48 million. The estimate was 1.45. Let's bring in Diana Olick. Anything really surprising here? Doesn't sound like it necessarily, Diana.
Not surprising, but Joe, you know, I always like to separate out the multifamily versus a single family. And in single family starts, we did see a steep drop of 8.4% month to month, 1.8% year over year. Also a drop in multifamily, but that tends to be a lot more volatile. And the reason this is so important, we did see yesterday in the NAHB's sentiment index that sentiment dropped dramatically, down 5 points to a 5-month low. And that was mostly on concerns over tariffs. But what we saw in January, because these are January numbers, and we didn't hear about the tariffs till the end of January, is that mortgage rates started January 1st at 6.97% and then went straight up, hitting a high of 7.26% on January 13th. So the builders are clearly reacting to the high mortgage rates. We saw that from Toll Brothers yesterday, remarking on higher mortgage rates and affordability. We've heard other builders talk about that. Pulte Homes talked about the difficulties in affordability. So the home builders are clearly looking at whether or not they can get buyers in the door. The NAHB survey showed that future sales expectations, it dropped the most, down 13 points. So that's why you're seeing the drop in starts and the drop in building permits, which are, of course, an indicator of future construction. So again, it's not surprising, but we are at the very start of the all-important spring housing market, and that's when you want to see builders start to ramp up production. Some people will say, yes, there's been a lot of bad weather, but these are seasonally adjusted, and year over year, we're still seeing the declines. So I think this is just builders pulling back because they're concerned about affordability, they're concerned about potential tariffs and the cost, because it's not just their materials, it's land and it's labor, and labor is getting more expensive too, because such a large part of the labor market in home construction is from immigrants. So again, the numbers are not unexpected, but they're not great. Back to you guys.
We had someone on earlier, Diana, who said we still build houses the same way we did 100 years ago, and we haven't. I'm just wondering. We're not going to have a bunch of those crappy prefabbed houses, are we? Isn't there only one way to build a really nice house, or is there a better way? Is there an AI way?
Well, there is an AI way, and in fact, Joe, we've done a lot of stories on that, AI in architecture and AI in home building and planning, and that's helping to bring some costs down. But real estate has always been notoriously slow to innovate and to modernize. And so we're starting to see that. But again, it's hard when the costs are so high and the potential for costs for materials. Remember, lumber, gypsum comes from Mexico, and Chinese tariffs on all those appliances that we pull into our homes as well. That's a lot of that market. So builders are very concerned about their costs and their margins. And interestingly, they're not buying down mortgage rates as much as they had or lowering prices as much. And the NAHB said that the lack of these incentives in February is because they're just not seeing so many marginal buyers anymore. That is, people on the fence. If you can afford it, you can afford it. And if you can't, you can't. That's how bad affordability has gotten now.